just under 3 weeks ago now, and is the main effort from the federal government to provide assistance to businesses to help businesses keep their employees paid and and employed throughout the duration of the crisis. As I said, it is the phase 3 bill. The first bill was largely a supplemental appropriations bill to provide funding to government agencies to assist with the response. The phase 2 bill, which I will touch on briefly towards the end of this presentation, it included provisions requiring small businesses to provide paid sick and family and medical leave to employees during the crisis. It also provided additional resources for state Medicaid programs and additional resources for some food insecurity programs such as WIC and SNAP. But again, my focus really today is to talk to you about what resources are being made available for businesses, and that was included in the phase 3 or the CARES Act. To give you a little sense of the scope of the bill, it is a $2.2 trillion package, which is approximately 10% of US GDP. It is intended to be a bridge to help the economy get to the other side of this crisis. At this point, it is fully expected that the economy is going to go through a recession. The question is how severe this recession will be. The CARES Act is intended to help make that recession as short and as shallow as possible. Most of the resources provided in the CARES Act are targeted at businesses, but there are resources being made available for hospitals. $100 billion has been made available to hospitals. Another $150 billion is being made available to state and local governments. And there are resources being made to provide checks, individual payments to individual taxpayers. And just briefly on the individual taxpayer provisions, checks started going out this week, $1,200 for individual taxpayers, $2,400 checks for joint filers and married couples, plus $500 per child. Those checks are being direct deposited for individuals who have direct deposit set up with the IRS. They are starting at the lower end of the income scale and prioritizing getting money into those individuals' hands first, and then they're just gradually working their way up. For people who do not have direct deposit set up with the IRS, they're going to begin sending out actual paper checks, but those are, unfortunately, those checks will not start going out until probably early May. Also, on the individual benefit side, the phase 2 and the phase 3 bill have expanded eligibility for state unemployment if the unemployment is related to COVID-19. Most of the eligibility requirements were lifted under the phase 2 bill. And then the phase 3 bill is providing an additional $600 per week on top of regular state benefits through July 31st. That $600 additional per week will be provided by the federal government. All the state needs to do is accept that additional assistance from the federal government. A key feature that people need to keep in mind, we're getting a lot of questions from businesses. Well, what if my employees make more money on unemployment and don't want to come back to work? The expanded unemployment benefit expires when an individual can return to work. So if a business has furloughed their employees because they are closed or they've been deemed a non-essential business, when business as usual starts to resume and individuals can come back to work, that is when the expanded unemployment benefit will expire. And then just like with any other unemployment benefit, employees would apply for these benefits through their state unemployment office. Now, as I said, most of the focus of the CARES Act is really on providing assistance to businesses. Congress's goal here is to provide resources to businesses so that to the extent possible, they can continue paying their employees during the duration of the crisis. It is the priority here is to keep the employee tied to their employer as much as is feasible. The reason for that is once we can reopen and resume business, it'll be much easier for businesses to restart their operations if they have employees already on payroll that they can bring back. And it will be much easier for employees themselves if they know they have a business to go back to work at. And additionally, Congress wants to avoid as much as possible having people being dumped onto state unemployment systems and having to get paid through those through those programs. So Congress is providing resources so that businesses, irrespective of whether they are open, can continue paying their employees. They have made resources that are available to all employers. Some of the resources are being made available just to mid-sized and larger employers, but some of the most significant resources are being targeted right at small businesses. And I'm going to primarily talk about what's being targeted at small businesses, but I just want to talk briefly about what is available to all employers. The first step the CARES Act takes to provide assistance to all employers are a series of temporary changes being made to the federal tax code. The most significant of these is that they are allowing businesses to delay payment of the employer portion of payroll taxes. This is the 6.2% per employee that businesses pay to fund Social Security. They're allowing businesses to delay payment of those payroll taxes between now and January 1st of 2021. Businesses will still eventually owe the government these taxes. However, they can elect to delay them, and then the first 50% of what they owe will not come due until December 31st, 2021. The remaining 50% will not come due until December 31st, 2022. The purpose here is to help businesses with liquidity and cash on hand so that they can use that money to help pay their employees and other expenses that they're obligated to pay. Now, there is an interaction with this provision and the Paycheck Protection Program that I'm going to talk about momentarily. If a business elects to delay payroll taxes, they cannot also request loan forgiveness under the Paycheck Protection Program. And I'll get to that in a moment. There are a number of other changes being made to the tax code. Businesses can now carry back for 5 years net operating losses for 2018, 2019, and 2020. They can accelerate recovery of AMT credits. And the bill restores qualified improvement property. This is a provision that was inadvertently eliminated in the 2017 tax bill. The CARES Act restores it, and it allows businesses to recover the costs of improvements they've made to their facilities. This is something that will largely be taken advantage of by retail establishments and restaurants. The other significant change the CARES Act makes with respect to the tax code is that it has created an entirely new tax credit that is called the Employee Retention Tax Credit. This is actually not getting very much attention because it was a late addition to the bill. But what it is a tax credit designed to help employers who have shut down either partially or fully, or who have seen a 50% drop in gross receipts, yet they continue to pay their employees. It is a refundable tax credit for 50% of wages paid by the employer up to $10,000 per employee. So think of it, it is a $5,000 tax, up to a $5,000 tax credit. Again, it is targeted to help employers who are continuing to pay their employees, even if they are shut down. There are a couple of restrictions. Employers with more than 100 employees, they can only claim this tax credit on employees that they continue to pay who are not currently providing services. So if you have more than 100 employees and you have employees who are working from home or working remotely or who are essential and are still coming into work, you can't claim it on those employees. You can only claim it on the employees who have been idled and aren't providing any services whatsoever, but you continue to pay them regardless. If you are an employer with 100 or fewer employees, you can claim this on all of your employees. You can claim it on the employees who continue to work remotely or telework or who are essential and still coming in, as well as the employees who have been idle and aren't providing any service. You can claim this tax credit on all of those employees. Now, again, there is an interaction with the Paycheck Protection Program. If you claim this tax credit, you cannot obtain a Paycheck Protection Program loan. Again, I'll talk about that program here shortly. And also recognizing that this is a tax credit, and you typically with tax credits you cannot obtain them until you file your taxes. Treasury is going to be issuing guidance on how businesses can claim an advance payment of this tax credit so that they have the money now and can use it to continue paying their employees. The other provision that is targeted, this is largely targeted at mid-sized and larger employers. The bill sets aside $500 billion for loans, loan guarantees, and a Federal Reserve credit facility to basically to provide, to back up and guarantee loans issued by banks to assist them through this crisis. 46 billion of this program is being set aside for the airline industry and critical national security businesses, but the remaining 454 billion is being set aside for businesses at large. Again, these are going to largely be what you think of as traditional loans. They will have some favorable conditions attached to them. But there will also be some restrictions placed on businesses who accept these loans with respect to stock buybacks and executive compensation. We are currently waiting for more guidance from the Department of Treasury and the Federal Reserve on how these programs will work. The priority for Treasury and the SBA and the Federal Reserve was getting the small business programs up and running as quickly as possible. So we still, as I said, we're still waiting for a little more clarity on how these loan programs for mid-sized and larger employers will work. But we saw last week that the Federal Reserve set up their Main Street lending program for comment, and hopefully that will be finalized this week or early next week. But that program will be targeted at mid-sized employers, and again, it is largely going to be a guarantee that the Federal Reserve will buy up loans issued by banks to help mid-sized businesses. It also is going to allow the Federal Reserve to buy up the Paycheck Protection loans so that banks can issue more of those. But again, these programs are going to largely look like traditional loan programs, and the Fed and Treasury is in the process of setting up the parameters of these programs, and we will hopefully have more information on this in the coming days. But as I said, our focus and the main program created by the CARES Act to assist businesses is the Paycheck Protection Program, which is a $349 billion loan program targeted at small businesses, 501c3 nonprofits, the self-employed, sole proprietors, and independent contractors. They are also making an exception in the Paycheck Protection Program for restaurants and hotels that are part of national chains. Typically, when SBA looks at a restaurant and a hotel that is part of a chain, they look at the national organization. For the purposes of the Paycheck Protection Program, restaurants and hotels that are part of national chains will be judged on a per location basis. That way they should, for the most part, fall under that 500 less than 500 employee threshold and be eligible for Paycheck Protection Program loans. These are loans equal to 2.5 months of average payroll up to $10 million. They are backed up by the federal government, but they are provided through local and national lenders. Right now, any SBA 7A qualified lender is eligible to issue these loans. Additionally, the SBA has expanded the universe of qualified lenders to include any FDIC insured bank or credit union. And this week we expect a lot of smaller non-traditional lenders, a lot of fintech type organizations to come online and be eligible to issue loans to further assist businesses in getting access to this money. Again, the purpose of this program, like the other programs, is to get money into the hands of businesses so they can use that to pay their employees. So they have made the requirements to obtain the loan fairly minimal. They're not asking for any collateral. They're not asking for any personal guarantee. But the key feature of these loans is that they actually will convert to grants equal to the amount spent on payroll, rent, interest on mortgages, and utilities for the 8-week period following the origination of the loan. There are a couple of limitations. First, 75% of, at least 75% of the loan must have been spent on payroll. The remaining amount can be spent on things like rent, interest on mortgages, and utilities. If so long as 75% is spent on payroll and the remaining 25% is spent on those other specified purposes, the full amount of the loan will be forgiven and converted to a grant. Any amount of that loan spent on other things that converts to a loan that would come due in 2 years. Payments would be deferred for 6 months. and the interest rate would be 1%. With respect to loan forgiveness, there are some further restrictions being placed on loan forgiveness. Loan forgiveness would be reduced proportionally if the employer reduces the number of FTEs. So if you have a business with 10 employees and you reduce headcount by 1, your loan forgiveness would be reduced by 10%. Additionally, loan forgiveness would be reduced if the employer reduces wages by more than 25%. Now, Congress recognizes that when this crisis started to unfold, a lot of businesses had to make very quick business decisions and probably laid off or furloughed employees before they passed this program. Recognizing that, they are allowing employers to avoid any reduction in loan forgiveness if they bring back employees and restore wages by June 30th. So under guidance issued by SBA, if a business has laid off an employee between February 15th and April 26th, they can restore headcount and restore wages by June 30th and avoid any loan forgiveness under the Paycheck Protection Program. Now, I want to emphasize this program is the priority for the federal government in terms of assisting small businesses right now. They are working very hard to make it work and make sure that businesses have, or make sure that banks have the resources they need to help get this money into the hands of businesses so that they can continue to pay their employees. However, or before I get to the next program, I also want to talk about there are undoubtedly a lot of questions that you have about what businesses are eligible and what you need to do. So the U.S. Chamber has created a resource checklist for you to walk you through what types of businesses are eligible, what types of things are lenders going to be looking for. Basically, lenders are looking for a good faith declaration that due to the uncertainty caused by the crisis, you need this money to help you continue operating or to continue paying your employees. You know, a key feature that I want to make sure that you understand is it doesn't matter if you are shut down or if you're closed or if you're not an essential business. They want to provide this money to you so you can continue paying your employees irrespective of whether you are open. Additionally, this guide will talk to you, or will explain to you what types of things you need to do to calculate average payroll, as well as what types of things you need to make sure you're doing to ensure that the bulk of your loan will be converted to a grant and forgiven. You can download this at uschamber.com/SB Loans. The other, as I said, the Paycheck Protection Program is Congress's main emphasis in terms of assisting small businesses. However, there is another program available to small businesses that can assist you in providing additional resources, and that is the SBA's Economic Injury Disaster Loan Program. This is a program that has actually been around for 60 years. It is a program that small businesses that have experienced earthquakes, tornadoes, hurricanes, or other natural disasters often avail themselves of to provide resources to help them rebuild following those disasters. This program is open to businesses that are experiencing disruptions due to this crisis. It provides loans up to $2 million in working capital on a 30-year term at 3.75% interest. It provides a slightly reduced rate for nonprofits, and payments are deferred up to a year. So I do want to caution you, though, on the SBA EIDL loan program. This is a program, as I said, that is set up to respond to specific crises when a business needs working capital to rebuild after those disasters. It was not set up with a crisis like what we're currently going through. They didn't envision something like this. Because of that, SBA, while the program can provide up to $2 million in working capital, SBA has been swamped with applications for EIDL loans. And because of that, they have had to look at the available resources and the number of applications. And they right now, at current funding levels, are limiting loans or limiting the amount of aid they can provide to $25,000 per business. This includes the $10,000 up to $10,000 emergency grant that businesses can request when they apply for an SBA EIDL. and again, they are having to limit this because of the volume of loan applications they're receiving. We are working to get more funding included into this program, but keep in mind, as I said, the priority for Congress is providing resources to the Paycheck Protection Program, because that program is set up to help you continue providing pay to your employees. That being said, you can also avail yourself of this SBA program, but you need to keep in mind a couple things. If you get both an SBA EIDL loan as well as a Paycheck Protection Program loan, they cannot be for the same purpose. Additionally, if you get the SBA EIDL loan emergency grant, the amount of that emergency grant would be subtracted from any loan forgiveness under the Paycheck Protection Program loan. And also a note on the emergency grant. I didn't really go into that in much detail, but when you apply for an EIDL loan, you can request an emergency grant up to $10,000 that SBA will provide within 3 days, and that grant does not have to be repaid, and it does not have to be repaid even if your loan application is denied. Now, again, I want to caution you here, given the volume of loan applications and the number of requests for emergency grants, SBA has had to limit the amount of the emergency grant. Right now, they are providing the grant based on the number of employees a business has. So if you have 5 employees, they're providing $1,000 per employee. When they issue the grant, they're going to issue a $5,000 grant. Additionally, while the goal is to get these grants out within 3 days, again, due to the volume, SBA is having difficulty processing all of the applications. Right now, they are telling us that they're able to process applications in 7 to 14 days. Once they have a chance to process the application, they're telling us they can get those emergency grants out within 3 days. Again, we are looking to get more resources, get Congress to add more resources to this program. However, the priority really is funding the Paycheck Protection Program loan, because that program is specifically set up to provide employees with pay. The SBA EIDL loan program, you can use those resources to pay your employees, but you cannot use them to pay your employees if you're also getting a Paycheck Protection Program loan. I understand that's very confusing, but there are a lot of moving parts right now. Congress is currently looking to provide more resources to both the Paycheck Protection Program loan program as well as the SBA EIDL. But the emphasis is really on the Paycheck Protection Program loan, because they want to make sure that businesses are able to pay their basic expenses, and first and foremost, continue to pay their employees. As I said at the outset, I want to talk briefly about a couple provisions included in the Phase 2 bill, specifically the paid sick leave and paid family and medical leave provisions of the Phase 2 bill. Under the Phase 2 bill, employers with fewer than 500 employees are required to provide 10 days of paid sick leave if the sick leave is related to the COVID-19 crisis. That paid sick leave can be taken when the employee is ill, quarantined due to exposure, to take care of a sick or quarantined family member, or to take care of a child due to a school closure. That leave is paid at the regular rate of the employee that the employee earns, with up to $511 per day if the employee is taking care of themselves. If the employee is out to take care of a family member, the pay is at 2/3 the rate of the employee's normal pay, up to $200 per day. Now, this is clearly a mandate being placed on small businesses. So the federal government is going to reimburse the employer up to the maximum through a refundable tax credit. Furthermore, the Department of Treasury is going to be issuing guidance on how an employer can claim in advance on this tax credit, so that they can get the money a lot more quickly and use it to pay their employee. The leave is going to be in addition to any other leave that the employer already provides, and there is a very narrow exception being made for employers with fewer than 50 employees. if that leave is being claimed to take care of a child whose school or daycare is closed, and if providing that leave would threaten the viability of the business. This is a very narrow exception. Again, it's only if the leave is claimed to take care of a child whose school or daycare is closed, and if providing that leave would threaten the viability of the business. And then lastly, the leave is not available if the employee can otherwise telework or work remotely. On top of the paid sick leave, the Phase 2 bill also is requiring businesses with fewer than 500 employees to provide up to 10 weeks of FMLA, but only if the employee needs to take care of a child due to a school or child care closure caused by COVID-19. That is the only reason that an employee can claim paid sick leave from their employer. The leave will be paid at 2/3 the regular rate of pay for the employee, up to $200 per day and $10,000 in the aggregate. And again, just like with sick leave, the federal government is going to reimburse the business for providing this paid FMLA through a refundable tax credit. And it is on top of anything that the business already provides. And then again, there is this very narrow exception for businesses with fewer than 50 employees if providing the leave would threaten the viability of the business. Now, I know that I ran through that very quickly, and that's a lot of information. A couple things I just want you to keep in mind. The main program here for small businesses is the Paycheck Protection Program. Right now, it's funded at $349 billion. Congress is in the process of providing another $250 billion to fund that program, and they're prioritizing this program because it is intended to help businesses continue paying their employees. That is the main goal of the CARES Act, is to enable as many businesses as possible to keep paying their employees, to keep those employees tied to their business. That being said, they're also looking to provide additional resources for the SBA's Economic Injury Disaster Loan Program. We are working to get that done as soon as possible. There is currently a bit of an impasse in Congress with respect to when that will happen, but we have every confidence that Congress is going to be able to provide the additional resources to both the Paycheck Protection Program as well as the Economic Injury Disaster Loan Program. Additionally, I mentioned that we have developed a guide for businesses to walk them through the Paycheck Protection Program loan and what they need to do to apply. You can download that on our website. I have also made that available to all the Wyoming local chambers, and I know that Aaron has a copy of that and is able to distribute that to you as well. We've also made a guide available on the SBA Economic Injury Disaster Loan Program. We have made a guide available on the Employee Retention Tax Credit that I spoke about earlier. And we have a guide available on both the paid sick and family medical leave provisions of the Phase 2 bill. We are going to continue developing these guides as more information becomes available. All of these bills went through Congress very quickly. And because of that, there are a lot of ambiguities. That was done in part intentionally to give flexibility to the federal agencies administering these programs, to allow them to get them up and running as quickly as possible, and to also respond as quickly as possible as challenges come about in the implementation of the program. We are working with all the agencies as we get feedback from businesses in how these programs are working to help guide them in making those changes. And we are continuously updating our guide documents to reflect the changes that these agencies are making. So please monitor our website as we develop these documents, uschamber.com. We also have a small business resources website, uschamber.com/co, where we are also posting this information, as well as a number of other guide documents on best practices to help businesses get through this crisis. So with that, Erin, I'm happy to take any questions.
Thank you so much. I know that was a lot of information that you have repeated multiple times in the past couple of weeks. I will open it up to questions. If anyone wants to type, if they have a question, I can read it if they don't want to unmute themselves. I do have one question myself in regards to the hotels. So we have several hotels in Casper that are owned by one company. So can each individual hotel go through this loan process, or is it under the conglomerate one owner?
So, like I said, they've made an exception for hotels and restaurants where they will be judged on a per location basis. So each hotel should be able to apply individually. But if the conglomerate has fewer than 500 employees, the conglomerate should be able to apply as well. But they can't, the individual hotel can't apply and then the conglomerate apply. So to pay all of they can't double dip, in other words. So
Sure.
They need to look at how best to go about applying.
Okay, that makes sense, because I know that there's actually a couple of different conglomerates that own different hotels in Casper, and I'm sure that that's probably standard throughout. Questions? Does anybody have questions? I know that we've all been definitely overwhelmed with the influx of information that is being available. Just so you all know too, the resource that Chris had mentioned, which was the U.S. Chamber / SBA Loans, that is actually on our website. We have done a really good job, I feel, of making sure that all the possible links to any type of help is available on our website, kind of a one-stop shop. And it is being updated daily. As Chris is sending out his daily reports to us, we are updating that information every single day. So whatever is the newest, we have it posted there for you. Again, any questions? We have Chris for a few more minutes before he jumps on to his next meeting. Feel free to unmute yourself.
And on the Paycheck Protection Program loans, we should very soon have a similar guide that is targeted towards independent contractors. Under the Paycheck Protection Program, solo practitioners or sole proprietors and independent contractors are eligible for these loans as well. And there are a lot of questions, particularly when you're an independent contractor or a sole proprietor, on how do I calculate average payroll. Those documents will help better explain that so that you have a better sense of how much money do you need to request in the loan. And likewise, we will, in all likelihood, begin having similar documents for the mid-size and larger employer lending programs that are going to be coming online here shortly. I know that we've been getting a lot of questions. Is there anything specifically carved out for tourism? There isn't specifically for tourism, but tourism is available. They can apply for the Paycheck Protection Program loans, and some of the larger operators would be eligible for some of the loan programs under the lending facilities being set up for mid-size and larger businesses.
And Chris, I know phase 4, one of the things that was being talked about was including the 501c6s, which is what Chamber of Commerce's are.
Correct.
What other things would be looked at in that phase 4 should it actually make it through and get passed?
So, the short answer is that's anyone's guess right now. Because Congress has effectively adjourned indefinitely, right now it doesn't look like either the House or Senate will come back fully into session until early May. It's really difficult to say what a phase 4 bill would look like, because that bill it's really going to require them being back in Washington, D.C. and negotiating out what that bill would look like. So for the time being, our priority is making sure that the Paycheck Protection Program loan and the SBA Economic Injury Disaster Loan Program have the resources to assist small businesses. There is a real concern that the Paycheck Protection Program loan could deplete the $349 billion by the end of April, if not sooner. So that our focus is really getting more money put into that program, as well as the EIDL program, so that those two programs can assist as many businesses as possible. On the C6 issue that you brought up, that is also a priority for us, because we want to make sure that all of our state and local partners can continue operating as well, because chambers like the Casper Chamber and others are going to be key in making sure that businesses have access to have the information they need to get access to these resources. So our hope is that Congress will resolve that quickly. It, in all likelihood, wouldn't be taken up until the Phase 4 bill. But if the opportunity presents itself to do it sooner, we're going to definitely take that. But right now, we're kind of in between the Phase 3 and Phase 4, and that is getting this supplemental funding for the 2 loan programs up and running.
Okay, and then for our small business owners that we have in our state and our country, aside from going onto our websites, is there anything that we as a chamber can do to help these small businesses, besides encouraging people to shop locally and shop, online and all of that? Is there anything that you're hearing throughout different parts of the country that are really being effective for getting help to our small businesses and getting people not necessarily in the door, but helping them out?
I mean, you've named the two, the biggest things that chambers are doing right now. But I think also, to the extent that you can help identify the banks that can assist in getting these loans to businesses, that would be really helpful. More established small businesses, they have a relationship with a bank, but newer small businesses or very, very small businesses, they may not have as traditional a relationship with a bank as other more established businesses. So to the extent that you can help those really small businesses identify banks that can assist them in getting Paycheck Protection loans, that would be tremendously helpful. Okay.
All right. Before we wish Chris the best, and is there anything else that maybe anybody has? If you do, go ahead and unmute yourself at this time. We'll give it just a minute. Okay. We have a listening group today, it looks like.
Well, and feel free to send any additional questions you might have to Erin, and she can funnel those to me, and I'm happy to follow up and get more answers.
Great, and I will add my email in the bottom of in the chat screen. So if anybody does have questions for Chris, if you think of them later, please make sure that you go ahead and reach out, and we will make sure to get those sent off to him. And in the meantime, again, thank you to everybody that did listen in today. And Chris, thank you so much for taking the time out of your busy schedule to come to Casper, Wyoming, so that we could have a great discussion, a great listening discussion with you. So again, thank you so very much. And we wish everybody the best. Stay healthy. And we look forward to normal again.
Thanks, Erin.
All right. Thank you very much, everybody.
Bye.
Have a great afternoon. Bye-bye.